Right now, OPEC and Big Oil have a weapon aimed at the heart of the American economy. We're seeing its effects in the failure of airlines. We're seeing its effects in the impact on truckers across our country. We're seeing its impact on a dramatic rise in the price of fuel. And we're going to see its effect on a continuing basis on the decline in the American economy. The Strategic Petroleum Reserve was constructed in order for the President to use it as a counter-weapon in order to say to the world oil market that we are serious about not allowing Big Oil and OPEC to exploit a vulnerability in the American economic structure. Ms. Kenderdine, the Bush administration thus far has refused to deploy this protective weapon, which we have, the Strategic Petroleum Reserve, meant to protect businesses and consumers across our country. What, in your opinion, would be the impact if we, as a country, under the President's instructions, stopped filling the Strategic Petroleum Reserve so that we reduced the amount of oil being taken off the world market and began to deploy upwards of 40 million barrels of oil in the Strategic Petroleum Reserve and made that announcement today?
The other witnesses and I have indicated it's difficult to quantify the precise amount of reduction in price that you would see. I would go back to the SPR exchange that we did in 2000. We put 30 million barrels of oil onto the market, loaned it. It wasn't a sale. We put $30 million as a loan. And to put that in context, I think at that time the world consumption in a year is about 3 billion, give or take, a couple 100 million barrels of oil a day or a year. Okay, so in a 3 billion barrel market, we put 30 million barrels into the marketplace, and the price dropped almost $7 a barrel. And the price drop was immediate. The price dropped before the oil moved into the marketplace. And stayed down that $7 per barrel for about 3 weeks. Then the USS Cole was bombed in the Middle East, and the price went back up. But then it fell back down again when the markets calmed down.
So much of what goes on in the oil marketplace is just speculation. It's panic. It's exploitation of out of control, a sense that the price is just going to go up and up and up with no stop. So to you, Mr. Barrett, would the trucking industry, would truckers across the country like to see our President stop filling the Strategic Petroleum Reserve and send a signal to OPEC that we are going to deploy the Strategic Petroleum Reserve as a way of signaling that we are not going to stand still and allow our economy to suffer this grievous injury that will have negative effect on truckers, on consumers, and on industries all across the country?
Yes.
You would like to see that?
Yes.
Expand.
Mr. Chairman, we have made that request of the administration that they stop filling the Strategic Petroleum Reserve. We don't know precisely what that impact would be, but I think even the mere threat of doing that may have an impact on the speculators. And it just seems silly and ridiculous to me at this time of high prices for us to be adding such a small quantity. And I see very little risk to our nation in stop filling. I mean, what's the worst that could happen? Prices don't go up, so then you resume filling? I mean, I see very little risk in the strategy to stop filling the reserves.
So this environment in which we're living right now is one where we're buying high at the very peak of the market. The American people, through the Bush administration, are buying oil at $119 a barrel. And at the same time that we should be selling our oil into the global marketplace to say to the OPEC countries, to say to the oil companies, this is not going to last. And those speculators will, in fact, receive that message very quickly and, in my opinion, respond, and the consumers will start to see the benefit in the marketplace. Do you agree with that, Mr. Berry?
Mr. Chairman, that is the hope that that is precisely what would happen.
Aren't we, Dr. Rusko, at the worst of both worlds right now? We're wasting taxpayer money, and we're raising prices to consumers at the pump simultaneously?
Our findings are that you could reduce the cost of filling the reserve by adopting this practice of putting heavier barrels in there. And if you did that right now with swapping, whatever the effect on the price is, if you swapped light barrels out now for heavier barrels and more of them later, you would alleviate that immediate effect on the price. We do not know what the actual magnitude of that effect is.
Thank you, Dr. Rusko.